Well, hello. I hope you're having a great October, almost November, getting ready for Halloween. Listen, I owe you a review of the insurance final. I'm back from my Alaskan cruise and also just got back from Virginia to see the grandbabies. So I'm sorry if you were waiting on this. Hopefully it's coming at a good time. So I'm going to spend a few minutes in this video and I'm just going to review the questions that were missed with a large percentage. I'm not going to go over all the questions, and there were several questions that were just eliminated because they were bad questions. So I'll post the questions that were eliminated in the comments on the video. If there are questions that you want me to go over that I did not go over in this video, just let me know and I'll be happy to give you a further review. So again, it's easy to reach me, jim@familywealthbuilder.com, and you can get me in the Canvas portal as well. So let's jump right in and let's do a review. So Daniel owns a commercial building with a replacement cost coverage, or a replacement cost of $4 million. The building's insured on a replacement cost basis for $3.5 million under a fire insurance policy that has an 80% coinsurance clause. So as we discussed in class, typically it is always an 80% coinsurance clause. In this particular question, it's a trick question, because if you do the math between the 4 million and the 3.5, remember the formula is had over should times loss. And if you come up with 80%, in other words, if the building is insured for 80% of replacement cost, you don't even need to do the calculation. In this case, the correct answer is $160,000 is the loss, and that is in fact what the insured would receive after the loss. In this case, the question says disregard a deductible. So again, that's a trick question. Replacement cost is the calculation for coinsurance, is a very easy calculation, and I would encourage you to spend a little time, review that, and just make sure you know it. As I told you in the beginning and throughout class, this question was on my CFP exam twice, so it's a good question to make sure you know. It's had over should times loss. And again, if you see that they have 80% coverage, you're good to go. You don't need the formula. So in this question, Ian owns the only feed store for miles around, and he's educated his customer with a few insurance terms, and he wants to make sure that Ian knows the difference between a peril and a hazard. So that's what this question is about. Fire is a peril. Defective electrical wiring is in fact a hazard. So the handling of propane is a hazard, and a fraudulent insurance claim cannot be challenged by the insurer after the intestable period has expired. That's a false statement. So the correct answer here is 1 and 3. Next question. Brian funded a life annuity through installment payments, and at age 59 and a half he decided to elect an annuity settlement option and to begin to receive payments. Which of the following life income options will provide Brian with the highest monthly income? So the correct answer is always that life annuity with no refund. Several people said a life income with payments guaranteed 5 years. That's not correct. Anytime you get a guarantee in an annuity payout option, you're going to reduce your benefit. So the life annuity option is always going to be the highest. The insured carries a lot of risk there, because if they die after the third payment or the first payment, the insurance company gets to keep the proceeds, or the premium, whatever's in the cash value. Next question. Heather Wilson purchased a whole life policy 12 years ago. She wants to stop paying the premiums on this policy without reducing the amount of insurance coverage, and that's key in this question. If she did so, which of the following is a non-forfeiture option she could use? So extended term insurance is certainly one. Reduced paid up insurance would be good, except since it is reduced paid up, it does not qualify for the premise of the question, which is her basic desire is she doesn't want to reduce the coverage that she has. So that's not the correct answer. All right, the next question. A total loss under a valued policy for specific items like jewelry or collectibles is settled on the basis of the. Now, I'm not sure we covered this sufficiently. Let me just point out that that valued policy, some of us call it a personal articles policy, it's always insured for a certain value. So any item that is lost under that policy is paid based on the agreed upon amount. So the amount of insurance covering the loss is the correct answer, because that's how you write those policies. So hopefully that was not, hopefully you got that. Maybe a little tricky, but if you know the type of policy that it is, it's a pretty simple question. Let's see, next question. Bob has an individual insurance disability policy. Now, I'm just going to tell you, in this case, we've been given some numbers in the question. It looks like Bob is receiving 60% of his income. That's his benefit. That's what he purchased. So we make that same assumption for his rider, which gives him, for this additional coverage, which gives him the what is it called? His gross monthly pay was reduced from $5,000 to $4,000. How much would he receive in residual monthly benefits? So that's what we're looking for, is the residual monthly benefits. And again, that would be a 60%, since that's what he's getting for his benefit. That's the same amount we would use to calculate how much is he going to get on his residual monthly benefits. So $600 is correct, because he's basically losing $1,000 of income. So his policy under the residual monthly benefit provision is going to make up $600. So that was the correct answer. Now, Mel died owning a $200,000 life insurance that he bought on himself for personal reasons. So he did not need all the benefits currently and elects to receive, his beneficiary, Norman, wants to receive the benefits in a 10-year period. So basically what we have here is the beneficiary, Norman, is going to receive benefits that really exceed the face amount of the policy. And so by doing that, he's receiving an annuity, and he's receiving benefits of $24,000. Well, the benefit we'll receive is $24,500 per year. So if you do the math, that comes out to $45,000 over 10 years, over and above the $200,000 of the policy, which is why he's paying tax on that amount. So that was the correct answer. So hopefully that will get you thinking, and this is a good question that you could see on the CFP exam. Next question, which of the following are true concerning the use of life insurance to fund business continuation agreements, buy-sell agreements? So we had several answers here, but let me just go through 2 and 4 were the correct answers. Insurance protects the seller's heirs from the inability of the buyer to pay the purchase price. Obviously that's true. And number 4, insurance lessens the likelihood that the buyer will look for ways to get out of the purchase obligation when it comes time to pay. So those are 2 correct answers. Now it's just a matter of eliminating 3 and 1 there. Term insurance is inappropriate is what this says, and that's not a true statement. So that's an incorrect answer. So 1 should not be part of the answer. And so then we look at number 3, insurance has to be used to buy in any buy-sell agreement. Insurance has to be used, and that's the key there. Insurance does not have to be used. I know as insurance folks, we would like to think that everything requires insurance, but in that case, it doesn't. That was kind of a trick question. So here's another trick question. All of the following are covered under the dwelling coverage A of the Homeowners 3 policy, except, and as you can see there, personal property is not covered under coverage A. It is covered under the policy, and that's how it became a trick question, and some of you fell for it. So just wanted to point that out. This question is really very simple. It's all about paying attention to the question. I don't know about a majority, but a good number of the questions you're going to see on your CFP exam are going to be like this, where they just want to trick you. which one of the following individuals would not qualify for long-term care benefits? Now, in this particular question, I think we covered this, but it's just a matter of reading and paying attention to the question and the answer. So 14 folks, 14 of you, said Matt, who has kidney cancer and is expected to only live another 5 months. And that is, I think this may be one of the questions we knocked out. But so I mentioned in class, and I want to say it again, that a lot of people get turned down for long-term care insurance because of illness. And I think that's really the basis of this question. Which one of the following individuals would not qualify for long-term care benefits? So Matt, who has kidney cancer, is expected to only live another 5 months. That's not considered a long-term issue, and he certainly wouldn't qualify for a long-term care policy. Uh-oh, I got a phone call. I should have put my phone on. Airplane mode, but I didn't. So let me get through these, and then I'll return my call. A client age 78 is confined to a nursing home. Which of the following programs are likely to pay? And again, this is just a matter of understanding what is going to provide coverage. And let's see, some folks said that for Medicaid may pay if the client has income and assets below state thresholds. So a client age 78 is confined to a nursing home. Which of the following programs are likely to pay? And 2 and 4 is the correct answer. Long-term care insurance may pay part of the facility if coverage of the facility type is broad enough. So I'm not sure that, I'm assuming that may have been a mistake for a few of you, but both of those would provide some coverage. Jim and Nancy Jones. Jim and Nancy Jones recently purchased a variable universal life policy. Which of the following can be characteristics of the policy that may have affected Jim and Nancy's choice of products? So a few folks said 2 and 4. 2, the premium is flexible. That's true. 4, they wanted the potential for equity investment returns, and that's true. But 3, the death benefit can be level or increasing with cash value, and that is also true. And that's a characteristic of universal life insurance, whether it's variable or not variable. So the death benefit can be level or increasing. Remember, that's option 1 or option 2. So that question was the correct question. The correct answer: which of the following statements concerning a personal automobile policy, Part A coverage, are correct? Now, this question is kind of like that previous homeowner question. It's about Part A coverage, which is the liability coverage. So the first answer is Part A provides bodily injury and property damage liability protection to an insured that is legally responsible for an automobile accident. And that's the correct answer. The next one is Part A provides payment for the reasonable and necessary medical expenses of an insured as a result of an automobile accident. So just remember that the liability coverage always pays for the other person. If the insured is liable, then their policy will respond to pay for the other folks. Every other coverage, Part A does not provide benefits for the insured, and that's what the second part of this question is saying. So that's an incorrect statement, which makes 1 only the correct answer. All of the following perils are covered under most homeowners insurance policies except, and we had, this is just a matter of really getting to know what the exclusions are. I would take a look at those before you sit for your exam, just kind of just know what the exclusions are. So mudslides and sinkholes, all of the following perils are covered under most homeowners policies except riot or civil commotion is covered. Mudslides and sinkholes is not. Christina is a 45-year-old. She wants to invest in the stock market on a tax-deferred basis over time when she has discretionary funds, starting now until she retires. And here's the key. She believes that stock market will fluctuate up and down over time, but over the long term will be significantly higher than it is today. So this is a confusing question, and the equity indexed annuity would seem like it could be the correct answer, but a flexible variable annuity, the variable is the key here, because the variable is what gives you access to the market. An equity index annuity is going to give you a capped upside, and so that's what they're basically highlighting here. And as a CFP, we need to know how to make sure we make the right recommendation. An equity indexed annuity wouldn't give the upper end return opportunity for an opportunistic investor like Christina. And that's the right answer. Hey, that's the end of our slideshow. That's the end of our review. Again, if you had any questions that you were curious about, I'm happy to answer to the best of my ability. And also just happy to say, hey, if you have, as you get ready for your exam, I want to wish you the very best. And if there's anything I can do, remember, my favorite key is if you don't know, the answer is C. And the other thing I would suggest to consider is make sure you look at those questions, read them multiple times, and just think about what are they asking, and make sure that you identify the trick factor. If it's a trick question and you can just sit back and look at the question for a minute and think about how would they be trying to trick you, it might help. And the other suggestion I have is you're going to see 1 or 2 questions on the exam that will require a tremendous amount of calculations. My advice, my recommendation is save those for last. Just mark them and move on, and don't spend as much time as you will need, because again, a lot of the questions are very simple and straightforward, and if you understand, like for example, the coinsurance question on my exam twice, and it took seconds to answer that question. So spend your time wisely, and drink plenty of strong coffee before the exam, I think, is a good idea. So thanks for watching my video. Thanks for, it's been a great time for me to be with you through the Rice CFP program. I hope to see you around. Take care.